Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Always a pleasure to be on your show.
Hilliard, are your clients calling up in droves asking, what could I do? What should I do?
You know, there's sort of a mixture. There's people that are quite spooked by this, and then there were at least maybe 2 or 3 weeks ago a number of people that phoned in and said, this is a great buying opportunity, we should get in. So it was quite a busy time. It still is, although it's settled down now. But it was around March the 23rd that the bottom hit, and that was the market was down around 35% in the U.S. and about 37 or 38% in Canada, and that's when we got the most calls. But we've been very busy talking to people on the phone, and it's definitely up in the air as to which way people want to go.
Did clients who were aggressive find that they lost a lot, and others who encouraged you to be conservative with their investments save a lot in the crash?
Yeah, so we the way our system works is we have a discretionary portfolio management. So we basically have the call on that within a framework of percentages that are agreed to in advance. So we kept everybody at the very low end of the exposure for quite a while before this, going back even a couple of years. So during the run up, especially in February, there was some stress because with the lower exposure, people were missing out on some gains. But when the turn came, then of course people were very happy because their returns were very good compared to the market. They only lost a small single-digit percentage compared to the market being down 30+%. So the calls have been pretty easy to make now because we've got a good story to tell. But still leaves the question open is, now the market's rallied. So the S&P, I mentioned, the S&P 500 was down about 35% at the worst. It's rallied to now where it's down only 21%. And similarly with the Canadian market, the Canadian market was a little bit worse and it's rallied a similar amount. So, our feeling is that people should wait and see more signs that there's a bottom first, because especially in Canada, we've got obviously with the real estate crash and the oil market crash, we've got two huge hurdles facing us in Canada before we can get through this. But we will get through it, but probably just a 4-week correction isn't enough for us to be sure that we've gotten through it already.
On the real estate side of things, we heard that sales were starting to pick up in March. Then, of course, the virus hit and all the shutdowns. How long do you think the shutdown on real estate could last, and what will be the impact when it does reopen and you can have open houses again?
Well, I think this is the you won't. There's an awful lot of stories going around about the Canadian real estate market, and of course it goes city by city. And I was on a conference call recently with one from Calgary, one from Vancouver, one from Toronto, and it was like 3 different countries. So the one in Calgary was totally depressed, and the peak was 2007. And the housing prices have come down quite a bit, and he was thinking that they can't come down too much more because they've already come down so much. The one in Vancouver, of course, the peak was in the summer of 2016, and they were starting to see some action in the lower end, and up to 800,000. Kind of, there was quite a bit of activity, so that's been shut down by the virus. And then the people in Toronto, they were like, "Whoa, there's no correction in real estate. We're just where it's all good kind of thing. So of course, the one to watch is Toronto. Obviously, it's really the last big city in Canada that hasn't really had a significant correction yet. And although at the high end, single-family homes, they really are a little bit lower than they were in 2017, but they haven't really noticed that yet very much. But I think there's going to be a big correction even in the Toronto market, and I don't expect, even when the open houses open up again after the virus passes, I don't expect to go back to anything like it was before, because you'll remember that prior to this, a lot of people were talking about the debt load in Canada, and there's this always the statistic that was mentioned, which was the household debt is 176% of after-tax income, disposable income, and it had crept up from 100%, 2 decades ago to 176%, something like that. So the income's growing, but the debt was growing much faster. And the other thing to know about that stat is it was 140% in 2007, and the U.S. was the same. Both the U.S. and Canada were both at 140%. Well, the U.S. after the crisis went from 140% down to 100%. They got their debt under control, and the Canadian debt just kept moving higher and higher and higher, thanks to very aggressive lending by the lenders and also a bubble in the real estate market, the housing market. So now here we are. But what's going to happen is going to be that so the numerator is the debt and the denominator is the income for those households. Well, the income for the households is going to crater because of being told to stay home in this virus. So what's going to happen is that thing's going to shoot up 180%, 190%, maybe 200%. There's no other country in the world that has anything like that amount of debt ratio. So it's going to be very difficult when we come out of this. What are the banks going to do? Are they going to say, "Oh, okay, now you're at 200%, whatever the number ends up being, the peak number, we'll lend you more money to buy houses"? I don't think so. So it's going to be a long process to so the first step being the virus has to peak and then it has to fade. And that's definitely a requirement. But just that one step alone won't be enough to get the economy or the housing market back on track.
We'll have more with Hilliard MacBeth right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, the federal government is bringing in its Canadian emergency response funding for people who have lost jobs. Will this be enough to make sure they can pay rent and pay their mortgages and still won't have to go bankrupt?
You know, it's a temporary thing. It's my understanding is you can apply for it as long as you were employed, as long as you made at least $5,000 last year. And you have been affected by the virus, which of course almost everybody has, and you can get a benefit, a weekly benefit, and it starts flowing in 3 days. So they've done a really good job of getting it up and running quickly. Apparently, the applications on Monday of this week were something like 880,000 people were accepted on the program, and it's up to a maximum of $2,000 per month. So that should be enough for people to pay their rent at least and buy some food, but not too much more. And a lot of people's mortgage payments will probably be bigger than that. But that's a separate program. There is a mortgage forbearance program that they're working on with the banks as well. But that CERB, as it's called, it has to be reapplied for every 4 weeks. So it's not going to be a permanent thing at all. There has been a lot of talk about what they call universal basic income, which I don't know if any country has really tried it for a long time. There was a pilot project in Toronto that was underway until the government changed in Ontario, and then it was canceled. But there has been a lot of work done on it in the U.S., and that's where everybody would get a basic sort of living amount of income to live on, and then above a certain minimum, of course, the people that have other income it would be clawed back at income tax time. So who knows? That's what this might lead into if this downturn lasts longer than a couple of months. It wouldn't be surprising to me at all that they start talking about a universal basic income. It's probably cheaper to administer than a bunch of different ad hoc programs, which is what we have now.
Right, provincial welfare and other benefits like that, of course, wouldn't be necessary anymore.
I don't think so. It would be all rolled into one. There's if people want to dig into it a little bit more, there's something called modern monetary theory, MMT, and it's quite controversial, but it's gaining a lot of credence now all over the world. The main people of it, or there's one of the founders is from Australia, Bill Mitchell. And then the leading people are in the U.S. now. Stephanie Kelton just has a book coming out. But one of their proposals is within that it's sort of a way of explaining economics. Initially, that's the biggest part of it. And then the second part, though, is there's a couple of proposals, and one of the proposals is that there would be kind of like a basic job for everyone, and it would be a government job, and it wouldn't be that attractive in terms of the work or the pay. And so the idea was it would kick in when times were slow, and then when the economy was good, nobody would want to take that job. They'd want to move on to a better job. So there could be things done that would allow people to basically find the way to get by when times are tough. Because that was one of the big things in my book that I talked about was, why do we keep going through these bubbles and then have a burst of the bubble and then have a crash and then have a recession or even a depression? There has to be a better way to do it. And, of course, that involves more government involvement. You can't just leave it to the private sector to sort it out because you need to have a larger government presence. But and there's a lot of ideological pushback on that. But there has to be a better way to manage this thing. And, of course, there probably will be more viruses in the future, too, so we have to plan for some way to figure out how to get through these things without having so many emergencies like this.
We'll have more with Hilliard MacBeth right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, Netflix says it's going to tone down the quality of its broadcast in an effort to make sure everybody who wants their services can get it. But I hadn't heard that there was a problem. Is this an excuse to give you less for the same price? And will this continue after the virus scare is over?
Well, I wondered about that because I noticed that the internet is definitely slowing down. We're lucky that we're in, I think, a neighborhood where there's not that many people and a pretty good internet connection. But but it seems to be slowing down quite dramatically the last few days. And that, of course, might be all those people applying for that CERB, the Canadian Emergency Response Benefit, but also it's probably all the people working from home. And, it's really a significant increase in the number of people using the Internet all day, every day. So I think probably Netflix and other people like that will start throttling back the amount of data you get through. And but Netflix has a bigger problem, and that is that the amount of product on there is not necessarily that large. And some people have pretty much gotten through all the shows. They're watching the Tiger King now, and then once they've finished that, they don't have too much left that they haven't seen on there. And there's nothing in the production pipeline. There's no shooting going on. There's no new product being scripted and maybe scripted but not shot for. It won't be ready for the screen. So that's going to be a big problem. And of course now there's a lot more competition out as well. So now once we're allowed out of our homes, I don't suppose any of us for at least a month are probably going to watch any Netflix shows because we want to be outside, especially in the summer. But that's going to be an interesting challenge for providers like Netflix to. But in the meantime, I think we're going to have to live with slower response times on the Internet because all of us are using up a lot of bandwidth right now.
Getting back to government help and bailouts, will small business, do you think, get the help it needs from the government? Over 70% of Canadian jobs and U.S. jobs come from small business.
Well, that's what they say about small business. I've always wondered about that stat because I think it's sort of distorted. I think the really good quality jobs are more with the larger organizations like government and healthcare and that sort of thing. But there is an awful lot of jobs that are come and go in the part-time jobs and that sort of thing in the small business sector, and it's going to be very tough. A lot of those nobody knows, but you see these estimates and say that only 80% of the jobs will come back, and it's who's to say if that's correct or not, but certainly it's not going to be 100%. For one thing, think about some of the things that might happen. A lot of us are getting used to eating meals at home, and or ordering from the different services that bring it to the door, and it turns out it's quite a bit cheaper to eat from home, and maybe people will get used to that, and they won't, because there was a tremendous proliferation of fast food outlets over the last 20, 30 years. Phenomenal. Every new mall has all these outlets, all these franchise. They're all franchisees, and it's probably this virus lockdown could be the end of it for some of those chains. And I have a friend in the commercial real estate business, and he told me that several of his tenants are told him they're not paying their rent. So, and there's been announcements by one big chain, Subway, I think, that said that they're not going to pay their rent until the customers come back. So it's there could be some very significant changes happening. What about high-rise office towers? What if people decide that working from home is just as good as working in the office tower and much cheaper? And you don't have to pay for parking. You don't have to drive downtown. You don't have to be in rush hour twice. And some cities like Vancouver and Toronto, it's a nightmare. Edmonton is a little bit easier. Calgary's very easy, but still, people might decide to rent less office space, and there's going to be a surplus of office space anyway, even before this happens. So there's probably a lot of changes coming. It's impossible to tell what they are yet, but there's going to be some great investment opportunities for people that can figure out what the new trends are going to be.
Well, with online stuff like Zoom and doing group meetings and so on, is that where the new growth will be, where you find out you don't have to have people physically together to share ideas and thoughts? Because I know a lot of software development people like it that everybody huddle up on a frequent basis.
I think a lot of industries, they're kind of used to that, where people kind of work on their own. I've been to the office before all this happened. I've been to the office at least a few times where I went to my office, got in the room, shut the door, got on the phone, did some emails, went for lunch, went back into my office, went home, and never talked to anybody else. So I'm thinking, well, I could have done a lot from home. And that, our company, we were lucky, we were set up to work from home. But now all companies are set up to work from home pretty much if they have to be. So, like now you have to put up with maybe a baby crying in the background or a dog barking.
Yeah.
But I think everybody's going to probably relax their standards. I used to think that I couldn't call clients from home because what if the dog barked? But now I think everybody will be more understanding of that. And maybe if you can call people from home on a business matter, then it's a lot more convenient. The one thing I've noticed about working from home, which is I'm going to have to figure out how to handle this, is it's a little bit too easy to just keep going and not take a break. And then at the end of the day, you're quite exhausted because even if you get up and walk around the house for a bit, it's kind of like you haven't really left your office, right? Because it's still there and it's calling to you, come back. And whereas when you go to the office, it's downtown, and then you get on the train or on the car to come back, there's a natural break of half an hour or whatever in between. And your brain knows that it's the end of the day and now it's time to switch off. There's no switching off when you're working from home. It's all blended into one experience, which it could be a problem if people don't learn how to cope with that. On the other hand, it's easy to go for a walk outside as long as you maintain proper distancing. So you can't really do that as easily at the office.
Hilliard, should companies that were busy buying back their stock be bailed out by the government? Shouldn't they have saved that money for a rainy day instead? Well,
it's funny you bring that up because there was about a week ago, maybe 10 days ago, since the last time you and I chatted, there was quite a big thing that happened with the banks. So in Europe and in the United Kingdoms, the banks had not been that aggressive in paying out dividends or buying, and I don't think any of them had been authorized by the regulator to buy back their own shares yet. And that's because they were still coming out of the 2009 crisis mode. Most of them all of them except one in the United Kingdom became a ward of the state after the crisis, and many of the banks in Italy and France were still, they were surviving, they were doing okay, but they hadn't gone back to normal yet. And but because as soon as this crisis hit, the regulators in both Europe and in the United Kingdom said to the banks, stop paying your dividends and stop paying any bonuses to senior executives, that sort of thing. And now there's been no bailout yet, but they've taken that step. And in the U.S., there was a big package introduced about 3 weeks ago, maybe 2 weeks ago, and it had some conditions in it in terms of what kind of dividends could be paid out to shareholders, depending on how the banks handled the bailout terms. But in Canada, it's amazing. So the Canadian banks have been buying back their own shares, and they've been paying dividends and increasing the dividends over the last 5 years. And their capital ratios are okay, but they're not really particularly high. They're below the international average is about 14% for common equity tier 1 capital, and the Canadian bank like TD is 12%, and the Royal is somewhere around 11.5% or something. They're all around between 11 and 12. And so their capital is it's well above the minimum being 9%, but it's not particularly high. And so it would have made sense for the regulator, which in Canada is called OSFI, to say to the banks, stop paying your dividends until we get through this crisis, right? But they didn't. And one of the reasons they didn't was because the banks have been paying dividends continuously since at least 1868. The Bank of Montreal is quite a bit longer than that. But all of the big banks have been paying dividends continuously since 1868, except for one national bank, which had a period where they cut the dividend out for a while. So they don't want to break that record. But does it make money for the government to be funneling money into the banks to help them get through this time? And I'm sure that they'll need help because there's a whole bunch of people that can't pay their mortgages. And then have money flowing out the other side to the shareholders. And in my mind, it doesn't make any sense. But when they asked the CEO of the different banks, they said, no, we don't have any plans to cut the dividend at this time. Now, when somebody says we don't have any plans to cut the dividend at this time, that doesn't mean they'll never cut the dividend. But it's a pretty big step. But it's mostly only because of that long track record of paying them going back to the 1800s. It doesn't really make that much difference. I think it would have been the prudent move to conserve the capital. Just, we don't know yet how bad this is going to get, but the combination of the oil price collapse and the real estate crash getting worse, is, the Canadian banks are involved in both of those sectors. They're heavily involved in the real estate part. They're somewhat less involved in the oil thing, but the oil thing will affect all Canadian businesses one way or another, almost all of them. And of course the Canadian banks are involved in all of that. So it's, I think it would have been a good move, and they may yet take them. Now the other thing they can do is they can sell shares to the public instead of cutting their dividend, but they probably don't want to do that because the shares have gone down quite a bit since this sell-off started.
Hilliard, thank you so much for being on the show.
Thanks, Jim.
My guest has been Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.